Is Donald Trump, aka Donald Pump, back in action? In today's video, we'll be taking a look at technical trading setups as well as what is driving this market higher as we see NASDAQ and S&P 500 ripping to fresh highs. And here's a look at the 1 week performance of the US stock market. You can see it is a sea of green. And you can see that's following yesterday's flash services PMI, which came in much better than expected, showing some upbeat expectations for the services component of the US economy, which makes up a huge chunk of our GDP. Stocks are higher on Tuesday with the S&P 500 and NASDAQ on fresh 2-week highs, fueled by hopes that the Trump administration might soften some of its proposed tariff plans. Trump announced that not all threatened tariffs would take effect on April 2nd, with some countries possibly receiving exemptions, though new levies on autos, pharmaceuticals, and a 25% tariff on crude from Venezuela were signaled. But despite this bounce back in stocks, we still see some really negative sentiment out there. And all of this, in my opinion, fuels a perfect storm for the Donald Pump to finally make a reappearance in 2025. Now, first of all, what is Donald Pump? Well, it's the idea that in his previous administration, Donald Trump used the stock market as a scorecard. He cared a lot about what the stock market was doing. And recently, it seems like he's kind of put that to the side, saying he's focused on other issues, not too worried about the stock market. But then all of a sudden, when the stock market starts sliding, what do we see Trump do? Well, seems like he's a little bit more flexible on the tariffs after all. And we do see the stock market absolutely loving that. You can see it doesn't look like a whole lot on this chart, but we've already ripped 6% off of the lows on the NASDAQ. And combining this with peak bearish sentiment as everyone ran for the hills and got scared, this creates, like I said, the perfect storm for a true market rip your face off rally in the NASDAQ. Because when everybody gets bearish, what happens is that everybody sells first and asks questions later. And now that the questions are being asked quite literally to the president by reporters about the tariffs, we're seeing some flexibility that there wasn't prior. And like I say often in my videos, leave your politics at the door. I'm really just trying to report on what is truly seemingly moving this market. And that imposed flexibility, you might say, oh, that's weakness from Trump. You might say that's a flexibility from Trump. Regardless of your politics, leave that for a second and let's just react to what the market's saying. The market is saying more flexibility in tariffs is a positive. And so last week we saw a peak bearish sentiment, 4 straight weeks of over 55% of survey respondents saying they feel bearish about the market. Again, you cannot get a more screaming signal that everyone is bearish. That presents a really attractive, in my opinion, risk to reward profile on the stock market. You can see today so far I'm up about 0.7% or about $7,500 on the day. It's been a nice bounce back this week for me. And you can see that I've actually expressed my bullishness, especially through a pretty outsized position long Tesla. We'll talk about Tesla more in a second. Here's a look at my year-to-date performance. You can see we're up about 5.3% and looking pretty good overall. If I take a look at the calendar view, you can see if I go by year, here's the month of March up about 4.8, gave back some in February, and in January we were up 5. A lot of this was the gold long position that I had, the silver long position that I have, and we'll talk about in this video, and of course a lot of the stock selections that I made in this recent sell-off. So why the heck did I get long Tesla, and why do I have such a good sized position on the stock? Well, Tesla is, in my opinion, a way to express a almost leveraged bet without paying for leverage on the stock market. Typically, if the market itself is doing well, like the NASDAQ is ripping and we're seeing fresh highs, Tesla also does well. And so what I'm looking for is on this breakout, I pretty much accumulated a big size position on my Tesla longs. Any sorts of pullbacks into support, I am looking for opportunities to continue to add longs. I'm also looking at the NASDAQ. I might play the cues on this one, take a long on the NAS 100 idea. If we do get some pullbacks, I really like the setup and I'm more bullish right now than I have been in many months, because again, when we were up here, I really didn't love the market valuations. I also didn't love that everybody was euphoric and so bullish on the market, and now we're starting to see the opposite. Everybody's still scared of this market, and the headline indicators out there are crazy, right? All the CNBCs, all the CNNs, all the Fox Newses, there's so many people who are selling the fear to the public, and to me, that creates a really good risk to reward on any kind of pullback that we get right now. I'll tell you more about the economy and why I think it's holding up in just a second. First, I wanted to take a look at the price action of gold here. You can see we've had a nice little continuation of this move here and a nice bounce off of this area. I actually am out of my gold long position, but watching this close. If we do start to see a bigger rollover in the price of gold, I've talked about this recently, but I'd look at potentially getting long on gold if we do see a pullback to this 29.80 level, or perhaps another entry at the 29.50 level, this previous resistance zone where we saw a key breakout looking at price action. So if we do see a bigger rollover in the price of gold, I'd be looking to try these two areas for possible longs as long as the edge finder continues to give me a confirmation signal. You can see gold is still getting a very bullish reading overall when looking at sentiment, technicals, and economic data currently. And when we look at institutional money flow, the latest COT buys and sells show that gold had a huge number of increases in long contracts and a modest increase in short contracts. This is a very bullish report, and the overall positioning for institutional money on gold is still very weighted long. And just a reminder, if you haven't taken advantage already, the Edge Finder is free this week for everyone to use. It is public access if you join our Telegram channel. The link to join that is in the description down below. I highly recommend taking your opportunity to try out the tool completely for free, unlock all of its features for this week. That is ending at the end of this week, so don't miss your chance. And while I'm still waiting for bullish setups on gold, I do have a setup as I am currently speaking on silver. So I'm actually long silver with around this $33 per ounce level. We saw a pullback into this area and it was too sweet not to take an opportunity to get long. So my goal here with silver is to see if we can get a breakout through this recent high around $34 per ounce. Let's just say that we get a big solid green bodied candle and we close above. What I'd be looking to do is then take this stop loss and actually move it into profit. Looking at the dollar index, you can see we are still just sort of chopping around at this level of support around the 103.5 level. We can actually see that that is a pretty significant level of support on the daily chart where we found a big kind of push off point back in November of last year. But what I'm looking for on the dollar index is to see if we can actually take out these previous lows. So this is a pretty key level of support. Like I said, it has been acting so in the last few weeks. I'm looking to see if we can actually break through those lows, as that would be really good for a new position that I have, which is the euro dollar longs. So yesterday in the Discord, I went long the euro dollar and wrote that up for members. If you'd like to get notified anytime I take a trade, the link is in the description down below to join our VIP group. And if you have questions, you can use the first link below. So if I take a look at the euro US dollar, let's pull this up really quick. What we can see here is that we've hit a key level of support. If I look left, this doesn't look like much, but it was actually a really big moment where you had this kind of wick above, pulled back, and then confidently price actually was able to take through those highs before moving up to its next key level of resistance here at 1.092. We've pulled back to this key area and I've taken an initial position long on euro dollar. And you might be wondering, what do you mean by initial position? Well, I'm dollar cost averaging on the euro dollar on the long side. So I have a long position here with willingness to add another long position if it continues to move lower. I actually wouldn't mind on a longer term basis scooping up low euro dollar exchange rates, in which case I think could be a longer term play for some bounce back in the euro. So this is something that I'm currently working on. And when I say add positions, what you'll have to understand is that I have a really small position here with willingness to add another position and another position if we do see a larger decline in the euro against the dollar. Again, this is more of a position trade and a longer term trade in nature. If the euro wants to continue, I want to ride along. And if it does continue to give me lower prices in the short run, I view that as an opportunity to scale into a trade. I'm also watching the pound US dollar on the daily chart for a similar scenario, but we're a little bit ways away from where I could potentially start building a position on the pound. Euro dollar and pound dollar are both getting currently a bullish reading within the Edge Finder as well. Today's video is sponsored by 8cap. And if you haven't checked out 8cap before, you can trade pretty much anything on their platform. They offer TradingView, they offer MetaTrader 4, MetaTrader 5, pretty much every platform that you want to trade on. And at the same time, they also have a special offer for our subscribers here on YouTube, which is you can actually deposit and get a free copy of the Edge Finder. If you'd like some information about this, head over to our website, a1trading.com/8cap. That's a1trading.com/8cap. We'll leave it linked in the description and the pinned comment below so that you can find this information for yourself if that's more convenient for you. But you can check this out where you can see the offer details about signing up with 8cap. And if you make a certain deposit size, you can get a free copy of the Edge Finder. It's a really cool offer. They basically buy the copy for you if you make the deposit requirements. So a big question many people have is whether or not the consumer of the economy right now is falling apart or if they're doing okay. And in today's live stream, I spent some time going through the state of the consumer. We took a look at credit card companies, we look at some of the economic data, and much more. Check out this clip. Let's keep going on this economic data stuff for a second. Retail sales. You really want to know how the economy's doing. Look into the consumer, right? That is a really important thing. We missed expectations and we had a pretty ugly retail sales number before that. This number comes up pretty soon. I'm really curious to see what the next round of retail sales data brings for us, to see how the consumer is doing on that front. But services PMI, we're missing the latest data on the, no, we didn't. This is ISM. Yesterday we had services PMI numbers. The flash services PMI numbers were great. So showing some optimistic outlook for the economy. So my point is right now with this is everything perfect? No, but the market headlines will have you believe that the market's falling apart and that consumers can't afford to blink. And that's the story that's been going on for a couple years now. People saying, oh, the consumer's completely destroyed. Well, I just think that you have a lot to prove there before you count the consumer out, because for years, people have been saying, oh, consumers tapped out. They can't afford anything. And then the consumer surprises everybody. Let's take a look at the credit card companies. Here's AXP. This one did take a dip, but it's bounced back nicely. And overall, again, during all that, oh, consumers dying phase, stock's done really well. Now, American Express, you might say, well, yeah, that's the more wealthy individual card. Visa's pretty broad, looks great. And what about Discover? This is DFS. Same story, right? Your credit card companies oftentimes give you a good indication of what the consumer is feeling too. So just something to think about. The cool thing about the markets is that you may have your opinion, I may have my opinion, but the cool thing about price is that price is kind of the ultimate voting system. So if you want to say, oh, consumer looks horrible, the credit card companies, which are arguably one of the best way to track the state of the consumer, they look healthy. In fact, AXP is a stock I'm looking to potentially buy some in. I sold a put at 270. So that put is now profitable because I shorted a put at 270. I actually hope that AXP goes lower so I can get some more shares of that. I hope that video was helpful to you, and I also wanted to make sure to share our Telegram channel with you. Every day we are posting up chart markups and analysis and in-depth breakdowns of what's going on both fundamentally and technically in the markets. We also drop bonus videos in the Telegram channel, so don't miss out. Come join our Telegram channel. The link is in the description down below. Have a great rest of your day.